Good afternoon and welcome to the Moving Markets Podcast. It is Thursday, the 21st of March, 2021. U.S. markets have been closed now for about an hour. If you're a regular follower of the podcast, you know we didn't do one yesterday, and that was not planned. That was a short notice thing that came up and prevented me from doing it. So in today's podcast, I'm going to talk about the Fed announcement and Jerome Powell's comments after the announcement, and then we'll talk about what happened today as well. So you get a double whammy today since we didn't do a podcast yesterday, and hopefully we can kind of cover everything and talk about this rally that the market is still running on, and a little bit of talk about whether it's a bubble or not and what justification there is and is not for this being a bubble. Make sure you take a minute to check us out at sostrades.com. We're over 40% now in the trades that we send out to members of the program. Just a phenomenal to start. Every trade we have sent out this year has closed out profitably or is still open and trending the way we need it to trend. So you got to be a part of this. Go to sostrades.com and see if there's a package there that is appealing to you. Thank you for tuning in and enjoy today's podcast. Good afternoon, everybody. Welcome to the Moving Markets Podcast. Today is Thursday, March the 21st, 2024. U.S. stock market has been closed for a little over an hour at the time we're recording this. For those of you that were hopeful to get a podcast yesterday, and of course I had every intention of doing that, I had some personal stuff come up that changed my schedule almost in an instant. And I was not in a position where I could do a podcast yesterday. So, the good and bad of running your own business is that you have the flexibility on the drop of a dime to maybe change your plans and go and do other things. The bad part of that is sometimes your schedule doesn't go the way you want, and you don't have an entire staff of other people that might be able to throw something together for you. So that's why you didn't get a podcast yesterday. And it's a little bit unfortunate because I wanted to talk about what happened in the Fed meeting yesterday and how the market reacted to it. So I'm actually going to talk about that in a minute. And then I'm kind of doing this in reverse order of what I do sometimes. I'm gonna kind of deliver some information that is for everybody, whether you're a member of Safe Option Strategies or not. And then I'll, for those of you who aren't Safe Option Strategies members, I'm going to edit out some stuff at the end of this presentation and talk just to the Safe Option Strategies members and fill them in on where we're at with some trades and kind of what the plan is going forward. We're off to such a phenomenal start this year, as good a start as we've ever had. We're not even 3 full months into the year, and we are up over 40% on the trades that we have sent out to members of the program. So I'm ecstatic about that. I hope you are. I don't expect the entire year to go along without any losing trades. It's kind of unrealistic. I hate losing trades, but I hate losing money on any trade ever. But I know it does happen sometimes, and that's okay. If we've got so many winners at such a good percentage that it just doesn't have a real negative impact. So anyways, let's talk first of all about what happened yesterday in this FOMC announcement. As expected, the Fed did not cut rates. I don't think anybody really thought it was going to happen. By the time we got to the announcement, there was probably over a 99% chance that the markets were expecting no rate change. So there was no surprise there. I think a lot of what Jerome Powell said in his comments yesterday was the good neutral stuff. The one thing that really bothered me and is still not sitting well with me is that, and this is what the market reacted to, is that he said, we're still planning on 3 cuts this year. Now, if you look at what the calendar is for the FOMC meetings and the possible times when the Fed could or would cut rates, you've got May 24th, May 1st, 2024. Okay, so that's the next one, May 1st. Just a little less than a month and a half from now. And then just about a month and a half after that, you've got June 12th. And then about a month and a half after that, you've got July 31st. A lot of people are thinking right now that rates are going to stay the same in May. In fact, that the market is predicting a 93% chance that rates stay the same in May. And I would concur with that. I believe that's the likely scenario. In the month of June, there is already about a 71% expectation that we're going to get that first rate cut. You've got about a 67% expectation that it'll be cut 25 basis point. There's actually almost 5% expectation that it would be cut 50 basis points. I think 50 basis points is ridiculous. I think whoever those 5% or close to 5% of the people are who actually think that we might get a 50 basis point cut, I don't know what they're smoking or what they're taking that they shouldn't be, but that's la la land. That in my opinion, that's absolute lunacy. I'm of the opinion that June should not get a rate cut unless there is a dramatic swing in the inflation indicators in the next 2 months. If you had CPI, PPI, PCE data all take a dramatic swing to the downside in both April and May, and remember the May report will come after the FOMC meeting, but if you had both April and May, the numbers come down kind of dramatically, then I believe June would be, the right move. I think you could justify a June cut. I just don't see that happening. Gas and oil prices continue to go up. They have an effect on everything that we spend money on. And I think it's incredibly unlikely that in the face of gas and oil prices going up, that it's realistic to get a cut. I just don't see how it makes sense for that to happen. But on the flip side, if the Fed does not do a rate cut in the month of June, now you're down to 1, 2, 3, 4 times left that they could do a rate cut. And they're talking about 3 cuts. They would literally have to do 3 of those 4 in order to fulfill what Jerome Powell kind of told the market was going to happen. And that is 3 cuts before the end of the year. I think it was stupid of him to say that. I kind of think Jerome Powell was already boxed in a little bit on maintaining that there would be cuts at all this year, instead of being more neutral and something, saying something more to the effect of, look, we would really like to do cuts. We just don't have the data to justify it yet. And that could change and we could end up doing cuts, but it's just not there yet. I think that would have been an appropriate comment, but he said 3 cuts. We're definitely planning on 3 cuts this year. Look, if he doesn't cut in June, July and September, there's not a chance in the world that you get 1 or 2 cuts in those respective 2 meetings without it looking incredibly political for Joe Biden and the Democrats. It's going to reek of politics, that it's being done not because it should be done as much as because they're trying to sway how people feel about the economy. Because even people that are still feeling it in their pocketbook, in the sense of they still feel the pinch of inflation, they still feel the higher prices, they still feel like their money is not going as far, that they're not getting any of that easing up or letting up. Even if they're still feeling that, there's going to be this thought that you give a rate cut or a couple rate cuts in a row before the election, and people are going to start saying, well, at least now we know that relief is on the way. Thank you, 1 foot in the grave, Grandpa Joe, for doing that. And now maybe my disdain for Donald Trump will be enough to make me want to vote for Joe Biden. That's what the Democrats are banking on, and it's going to be impossible for Powell to not look overly political if that's the way they end up doing it. So I think he's boxed himself in a horrible way, And the fear that I have is that the data will simply not justify a rate cut, or it'll look so horrible if there is a rate cut. If inflation ticks up a little bit more in April and May, and then in June they do a rate cut anyway, that's going to spell trouble for inflation, because that's going to probably push inflation farther up. And then you get to a situation where what he did looks even more political, because he went against the data, and it's going to look so much like he was doing it to try and help one political side or the other. So I'm not happy at all with the comments Jerome Powell had on yesterday's meeting, but the market loved it. There was a big rally in the Dow, the S&P, and the Nasdaq. The S&P finished at a new all-time high. The Dow Jones finished at a new all-time high. The Nasdaq didn't do quite as well, but still had a really good day, and it was followed up in the wake of a kind of a neutral jobless claims number. Jobless claims came in about where expected, so that didn't hurt anything this morning. Then you had new home sales came in pretty hot, way better, or excuse me, existing home sales came in at a much better number than what was expected. I mean, it was up a lot more than expected. And then you also had the Philadelphia Fed was expected to be down -5, and instead it went up 3.2, a drop off from the previous month, but not nearly the drop off that was expected, and an actual positive number 2 months in a row in terms of it being better. So you combine all of that, and it's no wonder that the market rallied again today. The NASDAQ, by the end of the day, gave up a lot of what it had gained early on. The NASDAQ finished up 32 points. But if you look at the intraday movement, at one time, the NASDAQ was up really nicely. And then it just kind of had one little bump in the middle of the day back up, but kind of a steady sell-off throughout the day, and a finish down towards its low of the session. In fact, let me jump back over to that chart. Let me bring the Nasdaq up instead of the S&P right here, but you put the Nasdaq over here, and its low of the session was whoops, I went to the Dow instead of the Nasdaq. Sorry, the Nasdaq finished pretty much at its low of the session. The lowest it got on the day was 16,393. It closed at 1640.01. Just not much better than where it was at its lowest point of the day. Now it was still up on the day, and I believe that may have been, is that an all-time high finish, or I feel kind of dumb that I don't know now if that's, I believe that is an all-time high finish. But just not quite as good as the other indexes did. I'm on an individual note, in terms of individual stocks, I am most disappointed with AMD, and AMD is a head scratcher for me right now. AMD was up big at the open of the market. It started to sell off almost immediately, and never, kind of like the rest of the NASDAQ did, it had one bump up during the day, and then it just never, it never got back up, and ended up finishing down towards its low of the session. Big start up, nicely slid, had the bump midday, and then just a steady slide right down to the close of the market. And it's a tough one for me to figure out. I don't know why people are selling AMD. I suspect there is some manipulation going on. And what I mean by that, it's a legal form of market manipulation. It's big brokerages, it's big companies that have big holdings that are driving the price down in an unjustifiable means, with the ability to just reset and buy in at a lower price. There's nothing in the way of news that I believe is justifiable to see AMD trading to the downside. It's just not logical. it's happened. There's no getting around the fact that it's happening, but it's not a logical move. And for that reason alone, I'm not terribly worried about AMD. I'm certainly not going to alter my position on AMD right away. I think they have come down now and tested their support right at 175. That's actually a little bit deeper than I would have expected the test to be. But 2 days in a row, they've managed to hold, even though they finished below 180, which I don't like, they've managed to hold above 175. And I think they will recover in the next couple of days. In fact, if you get a sell-off on the part of NVIDIA, I think you might see AMD benefit from that and see AMD jump to the upside. NVIDIA did have another day of upward movement. It wasn't huge. They didn't finish up as high as they were at their best point today, but a very decent move. So tomorrow, you've got Jerome Powell making some more comments tomorrow at 7 o'clock or 9 o'clock Eastern time. So about a half an hour before the market opens. He's going to make a speech. It's something that he could add to what he said the other day. He could clarify some things. He might even alter a little bit of what he said yesterday. So it's not something that is. Let me put it this way. It absolutely has the ability to have an impact on the market. There's not a lot more than that going on tomorrow. So if Jerome Powell simply repeats and commits to what he said yesterday, you could see an addition to this rally and see the markets finish up at new record highs. But if he recants on anything or tries to alter anything, that's the one area where I believe you could see this little 2-day rally give some back. And some of it might be just a little bit of common sense sell-off before the end of the week to sort of profit taking. That's kind of what I'm looking for is maybe just a little bit of profit taking. So that's kind of where I'm going to leave things. All right. So for those individuals that are members of Safe Option Strategies, we're gonna stay on. We're gonna keep. For those who aren't, this is going to end right now, and I'm going to wish you a happy Thursday and hope to see you back here tomorrow. And for everybody else, we're going to keep going. So I'm going to pause for a second and then we'll keep going.